Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I would like to look at the 4 US E-minis for yesterday. That was September the 12th, Monday September the 12th. The reason for this is yesterday was a brilliant example of how we set the larger degree trend and then take setups on the shorter term trend in the direction of the larger degree trend. If I skip through the E-minis, you can see that we had a red STF with a DP, automatic DP buy setup on the low of the day. This was on the NQ. On the Russell Index there wasn't a trade setup at the low. On the ES there was a DP buy. Again, this caught the very low of the day. However, the STF was red. Same position on the YM. We had a DP buy at the low of the day with the red STF. Now normally we suggest, if I come back to the ES, normally we suggest for standard traders that the STF provides a indication of the large degree trend, therefore red means down, therefore you only take sell setups, not buy setups. However, as I keep stressing in our trading room and on our training, is that all lagging indicators, no matter what they are lagging, or I should say all technical indicators are always lagging. But we have tools in MTPredictor that are leading, and these are our DPs and WPTs. And I just want to show you what I mean on this. So what we're looking at is the low of the day yesterday. So if I go to an ES chart, this is a 15-minute chart of the ES. First of all, you can see that we had an automatic DP buy at the low. So this would have given us indication that larger degree of support was coming in. We can put the analysis on this level here and get our trade analysis on that. The same was on the YM as well. However, these would have only confirmed after the low had came in. So the question being is, how would you know in advance the level where support might be coming in on this 15-minute chart? Well, I just want to scroll the chart back before the markets got to the lows. So here we are at around about lunchtime here, about 11:45, 12:45. So here let's put a DP support on the chart. Now this is really easy. Advanced chart analysis, DP, choose swing high low. Let's go down to the low here, put the DP on. As you can see, it's on the chart in advance. So here we knew that around the 11:31 down to 11:29 level was 15-minute support, and that was on the chart at lunchtime. Now obviously we know the market went down, got into these levels around 1:30 to 2 o'clock. That's where our main setup came on. But excuse me, but the point I'm making is that this level 11:29 to 11:31 was on the chart before the market got there. In other words, it was back at these points in time here. So let's now go down to the 3-minute chart and have a look at the 3-minute chart, bearing in mind that we knew in advance that 11:29 to 11:31 was larger degree 15-minute support. Well, here's our 3-minute ES chart, and if I go forward here, here's our 11:31 to 11:29 level. We can see that the ES did indeed get to this level here. However, there was no automatic trade setup at this level. I can put the DP on from this level here, and this represents the same level as we had on the 15-minute chart, so that can be then put back on the 3-minute. So yes, we did have the market rally off this level here, but there was no automatic setup. So advanced traders could have possibly taken a long trade there, but that's not what I want to look at in this video. What I want to look at in this video is what standard traders or slightly more advanced traders would have thought when this automatic DP came in here. Now again, the STF is red, so standard traders would have been wary of this, but, and this is the most important point, is for advanced traders among you, because we knew that this was 15-minute support, it is okay to take trade setups against the STF when you're at larger degree support. So we put the analysis on here. So the advanced traders among you would have said this DP buy even though it's against the STF, was actually at 15-minute support. Do you remember this 15-minute support has been on our chart for hours, therefore it's a good trade setup to take. Market goes up, hits our first target there for a nice 2.6 hour trade, and very nicely long off the low of the day. However, as an advanced trader, do you really want to be coming out at so quickly when we know that the 15-minute chart had already put a major low in? Let's go back and have a look at the 15-minute chart, and here we already know that we had an automatic DP buy come in. So let's put the analysis on here, and here we knew that on the 15-minute chart, in other words the larger degree chart, the trend was up into at least this level here, which is around the 1146. So we knew the larger degree trend was up into the higher DP. So my question for the advanced traders among you is, because we knew the chart was up into 1145, wasn't it? This level here, did it make any sense coming out at 1137? Well, no, it didn't. So this is how you can use the large degree chart to then manage your trades and say, well, actually I want to run this trade further. So the market comes back down again in a correction. It doesn't get to our initial trade entry, so if you're worried by this, you could have had your stops at break even and still be in the trade. Now the market gets up to our 1145 level, and actually I can represent that by coming back to this level here and putting the DP on from here. This represents where the DP would have been. It's actually slightly above 1145, 1146, so it's this level here. So then the advanced traders among you could have said, well, actually I would have really wanted to wait till the market got up to this level, and here you can see we're actually already now on a 6-to-1 R trade, so a much better and a good trade. However, let's now go down and look at the STF. When we reach this level, the STF is strong. When the STF is strong, i.e. beyond this strength band here, we then look to run the trade with our ATR stops, which is our blue dots. So this would have actually kept us in right till the close. So if I now put the analysis on here, it means you would have been long from the very low bar of the day up into the close of the day for an absolutely massive 10R trade. Yes, this would have turned an initial risk of approximately $375 using our correct position sizing to trade 3 contracts into a profit of 3,900, or approximately 3,900. That's what the power of position sizing does. It allows you to make profits that are much larger than the initial risks. So looking back on this trade setup would have projected, or the 15-minute support would have projected in advance the support zone that nailed the very low of the day. We then had an automatic DP buy setup that actually had you long off the very low of the day. We then used the 15-minute chart to gauge the large degree trend up, which allowed us to come to our first target here. We then used the ATR stop because the STF was strong to then come out at basically the close of the day, which was the high of the day, for a massive 10.6R profit. So that was an absolutely brilliant trade and a superb example of how we use the 15-minute charts. Do you remember on the 15-minute chart we had this support zone on our chart in advance, so we knew that was the level for support in advance. How to use the 15-minute charts to gauge trades in the direction of that trend. That wasn't the only market that had a buy set up at the low of the day. Russell Index didn't, but we've already seen the ES, which was a massive 10.6R profit. If we have a look at the YM, again, here's the buy setup right at the very low of the day. Same analogy, we'd be looking to run the trade further up into the close of the day. This particular example would have been an even bigger trade at 14R. Yes, for an initial risk of approximately $400, the profit would have been approximately $5,700, so 14 times the initial risk. A brilliant trade. And also on the NQ, exactly the same thing. Here we are, long from the very low of the day for another brilliant trade. Whoops, I missed that. That should be slightly larger than that. Again, another 14R trade. If I go back to the ES, and I clear the chart off, you'll notice that the rally up here was a perfect example of a three-wave rally. If I do choose swing high or low on the Elliott waves, come up here, you can see that we had an initial rally wave 1. If I put the Elliott waves on down here, you can see our initial correction was actually into a wave 2, into our wave 2 or B WPT. Then our strong rally here was actually unfolding as a strong wave 3. So it actually, as you're managing the trade, you would have confidence that this was a strong wave 3 type rally, and as such was a good trade to manage into the high. But just to reflect at the end, we used the 15-minute chart to project in advance, again this was in advance, this support zone. So this support zone was on the chart in advance. We then came into that support zone, we then placed our analysis on, we then chose to place the analysis on here. We then chose to run the trade further because the 15-minute chart was up. We were then looking to go into at least the 15-minute DP target here. When it got to this level, the STF was strong. Therefore, standard trade management guidelines were suggesting to run the trade, and we did that up into the close for, as you can see, an absolutely massive 10-hour profit. So a brilliant example yesterday of using the 15-minute chart in conjunction with the 3-minute trade setups on the USE minis, and here we had buy setups where you were long off the very low of the day to catch the single biggest move into the close yesterday. So a brilliant day for MTPredictor yesterday.